thank you so much for joining us again here in Berlin. It's great to see you as always.
Emma, thank you for having me in your program.
There's 5,000 people here at this event. It's the largest ever. What do you think that's all about, and what's the appetite for this industry in terms of coming together? Is it because actually it's quite a tricky period and we need to share ideas?
So first, it's terrific, post-COVID, that we are actually feeling very, very comfortable to be amongst each other. And second of all, it's also terrific to see that Zoom haven't taken over our lives. That we actually do get out of the house and put our clothes on and we go to events and we meet people and bump into old friends and what have you. So that is terrific. I think let's talk about the construct of that 5,000. At least what I have seen. Different from previous years. I have seen less Eastern investors and GPs, and more U.S. investors and GPs. So perhaps I'm sure you've got access probably the numbers better than I do. I suspect there is a significantly larger representation of North American GPs than any time in the past. Now, why is that? For a couple of reasons. First of all, post-COVID, the world has become more difficult to access capital. GPs are finding it more and more difficult to tap into a smaller LP wallet base. Second of all, North American markets have proven itself to shine above many of the other markets, and perhaps many of our North American GP friends have decided this is the right time to come in and collect the pennies here in Europe.
With that in mind, what do you see as the picture going forward, and where do you see the opportunities lying within that framework?
So let's break it by region and by asset class. Private equity have continued to demonstrate itself to be an asset class that is resilient. It can generate those high teens, low 20s returns in a relatively risk-adjusted manner. Real estate is going through its own challenges. Rising interest rates is the biggest Achilles heel for real estate investing, and that's going to continue to be, it seems to be, going to continue with us for some time. On the flip side, infrastructure investing is an asset class that have continued to provide the right risk-adjusted returns to investors, and there's an incredible level of movement in that asset class. And finally, credit, particularly private credit, that continues to be a resounding success, and I think Super Return have done a very good job adding that one credit day. I have not been here, but I suspect that has been a very, very busy day as well.
You mentioned infrastructure there, and when I spoke to you a year ago, you talked about that being a focus. Tell me about that and why you think that's an area of growth.
So Emma, a lot has happened since I saw you a year ago. We have about $5.5 billion in infrastructure investing. We have a team based between New York, Bahrain, and Riyadh, and that team invests in transport and logistics sectors. I'm very proud to let you know that today we are the owner of 14 airports, including LaGuardia Terminal B, JFK Terminal 6, and a large number of many airports around the world, as well as many ports in pretty much the four main ports in Australia and many other such transport and logistics hubs throughout the world. It's a vibrant asset class, generates on a, just to give you a feeling, JFK, we're looking at a circa 9% net return to investors. Not a bad return on a risk-adjusted basis on an asset class which is locked up for a good 39 years.
You talked there about a return. Obviously, there's a huge conversation at this conference around value creation, where that's to be found in this sort of environment. What would you say is key?
It all needs to be married with the risk you're taking on board. Okay, returns on a pure sense on their own means nothing. What it means is, what's more relevant is, what is the risk that you're taking with it. We can always go on the drug trade. That's by far the highest IRR trade you can have, but it comes to a level of risk. Coming back to what's more relevant, I think if I look across regions, the Western market continues to be, on a risk-adjusted basis, an attractive proposition. Even Europe, with a benign GDP growth of 2 to 3%, is still finding with the right asset, with a certain verticals and what have you, the right niche to create value. Middle East continues to be an incredible area for, it's a very vibrant marketplace. Public markets, private markets, macro, just the whole momentum is terrific. It is a relatively small market by comparison, so it's not one that you can deploy billions and billions every year. But from a return perspective, to me, that probably today provides the best risk-return adjusted category.
Earlier on, your wonderful chairman was on stage Muhammad Aladi, and he said, "You've got to grow or die." Is that something that you live by?
Yeah, of course, of course. Life is too short to be comfortable, and that is the motto of the industry, private equity industry. Their motto is very clear: you're acquiring businesses to create value. To create a 20% IRR on a business over a 4.5 period, big picture, you get a double top line, triple bottom line. That's how you make that returns. Doubling top line in a business in 5 years' time is not business as usual. That requires a level of fundamental actions to trigger that growth, and that's how you create value. Same thing applies to us. We're no different from our portfolio companies. We got to continue to grow, develop value to our constituencies as anyone else.
You've got to lead by example, if you like, and that flows into your portfolio companies, you believe?
That's correct. And if I can use a simple KPI, AUM, assets under management, 6 years ago we were at 10 billion, today at 53 billion. And we still think we're still behind. So I hope we can look back in the next few years with that AUM number multiplying in a meaningful manner.
What you're saying there is obviously ambitious. So what do you see happening in the next couple of years that excites you, and what areas are you going to be looking at?
Infrastructure continue to be a very, very important part of what we do. GCC. GCC, it's not only it's vibrant, there aren't many players there yet. Okay, so it is a market that is just ripe for that growth, which is very similar to what when I started with Investcorp 30 years ago, what I saw in Europe in the early 90s, that same kind of momentum, that same energy and dynamics, and again get it started. So that's hopefully the plan.
Watch this space.
I hope so.
And just finally, you're here with, I said, 5,000 people. What do you take away from an event like this where you've been able to share ideas and hear from your colleagues?
I think sometimes in our industry you sometimes forget that at the end of the day we're all humans. You know, kind of we smile, we laugh, we get sad, we sometimes vulnerable, sometimes overconfidence. And meeting with 5,000 of your peers and colleagues in the same location, listening to their stories, listening to how the year has gone for them, their ups and downs. I hope it buys us all a bit of humility and a lesson to be better people going forward.
Thank you so much. It's always a pleasure to talk to you. Thanks for joining us.
Thank you.